Hey, welcome, Richard. It's good to see you joining us for
Morning, Ed.
chat. This is Richard Causon. Richard's from a company called All Finance Solutions. Is a brokerage based in Burbage in Leicestershire. Richard, tell us a little bit more about yourself and what you do.
Okay, I'm a credit broker. I'm involved in a business called All Finance Solutions Limited. We're credit brokerages just based over in Satcut, so not too far away from where I live here. And the business came out of an original credit brokerage that I established back in 2007. So the entity itself's been around for 13 years. So yeah, plenty of experience. The business was predominantly asset finance back in the day because I worked at one of the UK's leading asset finance firms for goodness knows how many years. And we took that from being just me and a lady who worked with me in the office here doing admin for however many years, through to a couple of years ago, decided to grow the business, and as part of that involved you in coaching me within the business. But now there's 8 of us work within the business, 6 in sales, 2 in admin, and we've grown that to try and make that more of a national offering for our customers, and we seem to be growing year by year. We've got an expanding plan of relationship managers that we're looking to add to the business.
Yeah, super. Yeah, I mean, you've done a great job building the business to where it is, and then the pandemic hits.
Yeah.
You know, I've had this conversation with you around how much it's changed the face of the business, and actually how much your customers need you in a slightly different way at the moment. So what are you seeing and experiencing off the back of this pandemic, Richard?
So there's a general feeling out there that businesses that have been established for some time might have gone through economic cycles before, and clearly that gives you a bit of experience as to know what to expect, what happens, what doesn't happen. So there's a number of businesses out there that have prepared, but appreciate that, you know, the last time we saw an economic cycle that looked like this was probably more than, what would we say, 2007, 2008.
Yeah.
So a lot of businesses weren't trading at that point in time. You know, a lot of businesses are newer than that. So it has meant that there's a whole new skill set required out there, and things that people haven't come across before, certainly in the financial side of managing their businesses. It's just all come as a new surprise to them, and they've had to adapt to that, learn some new skills, figure out ways of behaving around their business and things that become important to them running their business on a day-to-day basis.
So they've had to adapt, but what about you? Because you've had to shift your marketing, you've had to shift your mindset, your team's working virtually like most people at the moment. So tell me a little bit more around like how you're communicating with your existing client base.
Well, this is an example of how we've moved to communicating by different methods. So yeah, we're certainly online with things like Zoom meetings, Teams, all sorts of different portals online to do video conferencing calls. Yeah, we're speaking to customers about their loans and their finance requirements using their new methods, which is, that's required some IT skills from us. We've bought in some of the expertise via third parties, but we've got a lot of it done ourselves in-house to get us up to speed with what we're doing. The team is now working remotely. A lot of the systems, things like accounts, sales, marketing, is all being done largely online. That has presented some new challenges to us, but also it's presented some massive opportunities. I think where we've looked at marketing using social media previously within the business and had a little tickle at it here and there, it's certainly become a very much more important focus from our point of view, to get the most out of customer bases and so on. So yeah, maintaining that connection with social media has become very, very much more important. And we're now seeing that as an opportunity. Why not? It's a change in the way we're working, Ed, and it seems to be working for us.
Yeah, that's great, and I'm noticing it a lot more. There's a lot more people on social media. Maybe they've been forced in a way into social media, but of course, if you're not posting every day, if you're not posting maybe more than that, maybe a few times a day on multiple platforms, then you're missing a big opportunity, because there's so much noise out there that you've really got to be shouting louder than other people. So yeah, it's really, really good to see that as well. So I know, from working with other businesses as well, we all know the phrase "cash is king," and getting people to look at their cash flow and understand where the dips in those cash flow might come, when they might come. I'm also getting people to think about, how do they come off the back of this, and they're going to need a lot of support from brokerages like yours from a finance perspective. Obviously, there's grants out there at the moment for a lot of businesses as well. There's the C-bills loans that are available. But what are you seeing that the business owners really should be focusing on right now that maybe they're not?
Certainly, from our point of view, we've coming up with a message of a 4-point plan that we can work with our clients with. We're trying to get out there and speak to and message as many people as we can with that. So that largely revolves around 4 things that you should be doing within your business as a matter of urgency. Number 1 is furlough, which the laying off of staff and being able to do that in a structured way, but retain them so as they're going to come back to you and work for you, because why wouldn't you? You've taken them on in the first place. They're a massive investment. You really want to retain those people in your business. So talking to people about furlough is one thing, and making sure that they're aware of the, certainly a high level from our point of view, that they're aware of the key points. Secondly, there are the rateable value grants available through your local authorities, and we as a business have had one. So if you're operating from a business premises with the rateable value and you're registered to pay business rates, you should also have on your doorstep at your business premises somewhere a piece of paper arrive from your local borough council saying, sending details of your rate reference, name, address, bank details, and send it all on. In fact, a lot of it's online. I think I did mine online in the end. And within 7 days, the monies were in our bank account. So that is really key. If you've got a rateable value premises, do it. Is certainly if you're in hospitality and so on as well, things like pubs, clubs, restaurants, there's even more money available to you than that. Thirdly, there is the opportunity to talk to funders. Now, this is where my industry expertise kicks in. We have any of our customers that have an agreement with us at the moment, a live agreement. We're encouraging them actively to come back to us, talk to us about getting a 3-month payment holiday. The vast majority of lenders are offering 3-month payment holidays on existing finance agreements, so they'll put aside 3 repayments for you, or change it to interest only for 3 months. They're all coming to some sort of arrangement. Yes, that money's still got to be paid back at some later point in time, but let's face it, cash is king. You need that money in your business right now. Go and do that. And certainly if you're working with a credit broker, they should be able to go to your lenders and do that for you. And then finally, the 4th stage of the plan, Ed, is C-bills. Now, me and you were sitting here and we're talking with, last night there was a new announcement from Rishi Sunak about a new loan scheme that's coming out. As a brokerage, we're staying on top of that, figuring out how we can utilise that for our clients and trying to work with the new schemes as they come out. For this is smaller businesses wanting to loan, they call them micro loans under £50,000. But we're working to try and catch up with that and figure out what Rishi Sunak's putting in place. But we're very much now, we're 2-3 weeks down the line with C-bills loans, and a lot of our funders have access to C-bills loans. And again, we're talking to customers about those loans, see what we can put in place for them, and trying to get them the cash that they need to support their business right in the short to medium term.
Yeah. So I love that. Yeah, I mean, it's a really good logical step for the 4-point plan you're furloughing your staff, make sure you're doing that in the right way. I love the fact that, as you're talking to business owners as well, getting them to think about not getting rid. Some might. I get that. Some businesses might shrink.
Yeah.
Some are actually going to grow off the back of this as well, and maybe need to look at recruitment. The grants, 100%. If you've not got your grants, get your grants. I'm really pleased to see actually in the industry across the UK, high levels of numbers. I think something like 62% of the grants have been paid out already. So that's really, really good. It's fast work by the councils as well. Not sure what it is in our area here in Leicester and in the Hinckley area. Payment holidays, that's really nice flexibility as well by mortgage payment holidays, but also finance. It's nice to see that it's happening in that industry, and the CBILS as well. So what are you? One of the things that I've been talking to some businesses about is actually they've been doing pretty well out of this. Okay, so they've been able to move and shift their business in a particular way that means that they can maybe they've expanded and grown their business anyway. So what's your perspective on them getting a CBILS loan off the back of this? Is that right? Is it the thing to do to promote their business? Should they be worried about that at a later date? What's your perspective?
So the main criteria that we're being told to look for within the CBILS application process is this business being affected by CV-19 in some way, shape or form? So if the business is cash rich right now, but yes, they're being affected by CV-19, so there's a cash outflow, then that can be construed as the business is seeing a negative impact during the COVID outbreak. So the justification could be there that the business needs the CBILS loan to be able to see it through on a cash flow basis. So why not? Why not make an application to a lender and go through that process? A lot of our customers we're seeing are already speaking to their bankers about the CBILS loans. That, in some respects, is the bigger issue, that it's taking quite a long time, and we're talking weeks to get the applications through from the main banks. Where we've scored quite heavily and managed to work with a number of our clients is we've got some independent funders, so not the high street banks. Those guys are more nimble, they're smaller, they can react faster, and their application processes have adapted to the new loan process a lot quicker. So we have had some CBILS loans that have been inquiries taken on a Monday, and by a Friday we've seen payment of funds over to the client. So
wow,
it's
that's really quick. So no, banks are not getting that. Let's say it's not being reported that they're getting that speed back to the clients because there's so many, right? There's maybe applications, the systems and processes in the banks aren't adapting to it quick enough. So you're saying that smaller lenders are actually much more flexible and can get that quicker to businesses potentially.
We will always say, as a credit brokerage, it's horses for courses, Ed. So, if a customer wants to hold out for every last penny and wants to make their loan the cheapest they can possibly make it, but bear in mind that the first 12 months are interest free anyway, then it may well serve the customer rightly to hold out for that main bank loan. But we're looking at flexibility and speed of service with other providers, and seeing massive gaps between what the main high street banks are providing and what some of the more niche lenders can do. But we have access to a lot of those, 25 funders on our panel, right the way through from high street banks right the way down to private equity invested lenders. So we've got a whole gamut that's across the board there, and even if it's not down to a CBILS loan application, there's still other types of loans out there that customers can go to try and plug the cash flow gap if that's what they need for the next few months.
Yeah, I mean, it'd be great to talk about those as well, because at the moment what's been pushed out through the media, which is the right thing. When you've got your grants and you furloughed your staff and you're looking at CBILS and all the things that are available maybe because we're not shining a light on it, people might forget about, invoice factoring or refinancing a previous loan, or leveraging an asset and so on. So,
Yeah.
how do you make sure that people are aware of all of this, Richard?
Well, the conversation from us starts very much along the lines of the 4-point plan and talking to people about their circumstances. But that, once we've got to the subject of how cash flows working or not working within their business, that can take any multitude of directions. Our business is called All Finance Solutions because we pride ourselves on the fact that we can access commercial loans, commercial mortgages, invoice financing, asset finance, all range of bridging loans, development loans. So a number of those have been covered by the CBILS scheme. So certainly invoice financing, overdrafts, HP, leasing of assets, and commercial loans are available, all that have CBILS funding. So you can get 12 months worth of fee-free lending using those sources in effect. So
wow.
it's worth exploring the whole raft of different funding solutions to see whether, if you've not got any borrowing right here, right now, other than an invoice financing facility, and you say, well, CBILS is not necessarily for me, what about converting that invoice finance facility to a CBILS invoice financing facility for the next 12 months? That might seem very appealing to you when you think about the possibilities, how that might work and what that might mean for your business cash flow.
Yeah. And another question, when you're sort of looking at, because obviously because cash is king and cost as well associated with that, and the Bank of England moving the rates just recently, has that affected the market at all, Richard? Are you seeing any shift in the APRs being offered?
Interestingly, Ed, no, not particularly.
Really? Wow.
The situation in the money markets, particularly in the pool that we play in, tends to be that they go out and they buy their money on a monthly basis, and therefore the changes in interest rates in the wholesale money markets they're still awaiting to catch up with what actually goes out to the customers as an overall lending rate.
Right.
The interest rates were already so low in the marketplace that if it would have to be a fairly substantial sum of money that you're borrowing to make a massive difference, given the drop in interest rates to stimulate the investment. And let's face it, if it's the right investment to be making right here, right now, then you would make it whether the interest rates were what they were prior to that interest rate change or after. I'm sure that there's very few decisions that would hinge on the overall interest rate as a deciding factor as to whether you went ahead or not. So that, I think, is just down to good cash flow planning and good financial forecasting to make sure that you've got plenty of margin built into the sales from whatever the investment is that you're going to do.
Yeah, cool. Okay, so now I'm going to put you on the spot a little bit, okay, with your expertise. A top tip, just one top tip for someone in business that can foresee or is already in cash flow problems. How can you help? Apply
for CBILS loan now. Don't leave it for 2-3 weeks. And if you've applied through your main bank for a CBILS loan, go and find another provider. Go and find somebody else or a broker like me that will provide a second opinion, because it's taking so long. Don't wait for the answer to come back. You could have half a dozen offers on the table for CBILS loans. Until you actually sign the paperwork and take up one of them, then you're not precluded from going and getting another one.
Great, that's really good advice. Okay, so second one, top tip for a company who's actually doing all right. They've got plenty of cash coming in. They're still working their business. They may even be doing slightly better because they've shifted their business or pivoted their business a little bit. What advice would you give them?
Okay, why would you not take a loan out and try and capitalize on that at this point in time? If you've spotted an opportunity that is creating wealth within your business and you're able to generate income off of that, then think long and hard about the opportunity there to be able to take a loan or some form of funding to be able to springboard that onto a whole new level, because you've learned a lesson now, you've figured out how to do this, you've figured out the way that your business can push forwards. And I think that that would be a great time to be invested.
Super. Okay, and third one for me, as we were talking, these were coming into my head. So, yeah, I am putting you on the spot here, genuinely. So the third one is businesses, no matter where they are. Actually, I'm talking to all the businesses, all my clients, and saying, well, how are you preparing for the uplift after this? Okay, so the bounce back ability. How do you come back stronger and better? What advice would you give to those companies that are thinking about, well, actually, when we go back, how does our business look and how do I support that?
Well, certainly from the point of view of the lessons that we've learned internally to us, and I would say that they would be fairly applicable to most of the businesses, is think about technology and how that's changed and how we've been working around technology. I'd be lying if I said that all of our technology worked as well as it should have right the way on day one. So there's always going to be a question there of, do you invest in new laptops, a new server, new hubs, new telephone systems, things like this, and making sure that they're all in place for whatever future's going to hold for us.
Yeah, absolutely. Yeah,
because when we go back, things will have changed, and we will change the way we operate, because some of this has been really good stuff. Like these meetings online have been an absolute godsend to us in some respects. So yeah, think about how you're going to invest in them, and obviously make sure that you can secure the funding that you need to achieve that.
Yeah, that's just a really good thought, actually, because you're right. Things are going to be different. People are. They may even be calling their team, their managers, to work from home more often. Businesses are going to have to be flexible to that. Technology being supplied to support them through that. They might need a bit of investment around there as well. So, yeah, love that. That's really good thought. Richard, I really want to thank you for taking the time out, sharing your expertise, sharing your thoughts, and how you shifted as well. Thank you. You're only based in Burbage, so if anybody's around in the area, and I know you work up and down the country, so do get in touch with All Finance Solutions. But Richard, thanks ever so much for the conversation today. Great stuff, and no, thanks very much for your support, coaching myself and All Finance Solutions through the last years, Ed. It's been great. Yeah, you're welcome. Cheers, Rich. Take care. Cheers, Ed. Thanks. Bye-bye.